What's going on, people? Welcome to another backtesting video. You guys are really running up the views on these videos, so I'm going to keep posting them, and I need to be doing this practice anyway. You know how it goes. Sit back, relax, and yeah, we're just gonna spend some time in the charts. That's what it's all about. Got a bullish order block there that we traded down to during London, and then we can see we broke higher, although this London session on, by the way, we're looking at Euro USD. We're looking at Euro USD, and this is from the 8th of May, but that doesn't really matter. Again, this is just a matter of we're just here to look at pure price action. I don't really care where it's going, whether it's going up, down, but this doesn't look like a very nice London session to me. But we'll just mark that out, bullish order block, and we can have a look at how certain swing highs are getting taken and then breaking market structure, etc. But yeah, so we have a breaking market structure here. Ooh. That was a little accident. Happy accidents. Break of structure, then we return right up back to the bearish order block. So I'm gonna make a color code this time, because I think I was just doing any random color last time. From now on, blue is gonna be bullish order blocks. No, blue is gonna be order blocks, period. And then we'll start to build around. But look at this massive liquidity void, and you see our price just steps up through it and then breaks lower. Interesting. We have a breaking structure here. You know what, we need to put that at the bottom. Cool. And you can see our price runs down to this sell side liquidity, and we have this retracement. Where does it retrace to? This fair value gap here. There's also a bearish order block. I'm trying to see if it's a breaker as well. I guess it is. I'll show you what I mean. So fair value gaps, we're going to make we'll make them orange, and then swing high, I guess that's a swing low. We didn't trade into that. This could be a mitigation block though, I guess. Swing high, and then swing low. Wait, sorry, swing high, and this would be the swing low in between. But we didn't even trade into that, we just traded to this fair value gap. Which happens to be here. But you can see how we keep breaking structure, and then we continue lower. I'm going to put sell side / breaking structure, because break off structure. I guess you could say the same about this, but this is more longer term, as you can see from the significance of it. You know, this is a like an intermediate swing, short-term swing to the left, short-term swing to the right, making this a intermediate swing low, which is why I consider it a significant liquidity. I'm just looking at this range because I want to see where we traded up to here. Obviously we traded into a premium, and we also traded back into this fair value gap. This is why it's important to understand that fair value gaps, you can't just ignore them. Like once we trade through them, it's still relevant. It's traded through on the upside, downside, so now it should act as resistance. So we trade back up to it, and you can see that's exactly what happened. How would we anticipate ourselves trading back up to this? Well, I guess we could look at the range that we're in. Once we have this break in market structure here, Once we have a break in market structure there, we'll start looking for a premium, because price would then try and trade to 50% or premium. So obviously we're on a 5 minute. On the lower time frame, it's likely there's a fair value gap here, but we're going to ignore that fact, and we're going to say, okay, what PD arrays are resting in premium that you could trade to? Well, we've got this fair value gap, we've got this swing low as well, but before all that we have this fair value gap. But again, I'm not saying it's easy to I'm not saying it's easy to identify those kind of things for sure. Same here, we only trade to I think 50% level of this range, just above it. But again, on the low time frame, it's likely there's back and forth movement around here. But recognizing breaking structures, definitely important, man. Definitely important, because the earlier you can recognize it and understand that it's a break, and understanding breakaway gaps as well, such as here, this would be a breakaway gap. I need to start, to be honest, I need to start understanding what breakaway gaps are, because even to this day I don't fully understand how to necessarily recognize them. But I can imagine they're quite relevant. So that's a breakaway gap. This would be considered a breakaway gap as well, because we broke away and then traded higher. So what my mission is now is to try and identify all breakaway gaps, so that when they form, I can anticipate them forming, because breakaway gaps are something I never fully anticipate forming. And there's also something called a midway gap, which is a gap that's created at the midpoint. Like for example here, there's only downside trading, but again, I'm not 100% sure on the relevance of them, and I don't think we even, oh yeah, we do refer back to these levels later on in the week, but we're not there yet. Let's just carry on looking at price action. So we are going to acknowledge all these this whole range. And you can see how we trade to like the 25% level here of this fair value gap. Sorry, 25% level of this entire range, showing weakness. So this is Asia. Oh yeah, by the way, let me make this clear. So my yellow lines are delineating London session. Blue is New York Hill Zone. Blue to green is London close, and then between here is like, you know, what do you call it? Central bank dealers range, pretty much. And then 8 p.m. onwards is 8 p.m. till midnight. Black is midnight. 8 p.m. is to here is Asian range. So. And one thing to note about Asian range, and you'll see as we go into the next day, is the way that price tends to take out the high and low of Asian range. Not all the time, but you'll see like even here we took out Asia's low here and then traded into the Asia's high, and then what did we do? Trade back below. But obviously we'd need a bearish bias to understand the relevance of that. But you can see we traded back into this fair value gap here. This is very consolidated price action. Manipulation. Expansion. Entry here. Beautiful entry there. see how we ran this buy side liquidity. As soon as we tipped above it, we left it, kissed it, left it. And I think this range, yeah, we traded to the 50% level. Interesting. Of this trading range. So it was a premium off that range, I guess, where wicks traded to. It's things like this which I do like plan to completely understand. Like, for example, why didn't it just trade to here? Why did it have to reach to here? It reached to a premium of this range before breaking lower. Like, it's, you know, and I guess it traded to this as well. And in all fairness, you could argue that this is a breaker Y, swing high before breakdown. Where's the last swing high? Here. And there's a swing low in between here. And if we draw that out, we can see it matches pretty much perfectly. So I'm going to make the breaker a different color, like to the pip. And it seems a little bit extravagant to be marking that out, but again, swing high, swing low, or swing high, swing low, or swing high, swing low. Like, this is a significant swing low. Why? It's got two short-term lows between it here and here. So being able to recognize short and long-term highs and lows, intermediate highs and lows, very important. We can also see an entry here for a sell. And you'll see how the bodies are respecting the 50% level of this fair value gap. So I'll make that clear. Where's our breaking market structure? Here, so price shouldn't trade back above this until it's done its job. And why didn't price need to return back up to this? Well, you can see we traded this area, this range from this low to this high has been traded through on the downside, upside, downside. So I'm guessing this has been fairly, this range from this low to this high has been, price has been delivered to it fairly. So like from this low to this high, we've going up, and down, and then left it. So that gives us a reason as to why this fair value gap is the one to get traded to and not this one, because this range has been equally distributed in terms of buy side, sell side, and left. This area hasn't. This has only had I guess sell side, upside, sell side. I don't know, but we can all try to understand price action, understand the algorithm. You can also see that we traded the 50% of this wick. Again, this is the importance of ranges. Wicks are ranges too. A lot of consolidation between 5 AM and 7 AM, and then at 7 AM break lower aggressively, and then we have an entry just above this swing high here, buy side liquidity, and then it breaks lower. Massive fair value gap. One day I am going to do I am definitely going to do a video looking more into fair value gaps and looking at the anatomy, so to speak, of them, because I do want to try and understand them as much as possible. So let's look for our breaking market structure. I guess it was when this swing low got broken here. because it's quite, yeah, we aggressively traded lower. And what I'm trying to figure out now is why didn't we trade deeper into this fair value gap? But I guess we had a turnaround in the market here because we traded higher up to it here. Interesting. Interesting. Oh, I forgot to add my entries and exits. Sorry guys. Let's start adding our entries and exits. Again, this is just me tricking my brain into thinking and understanding that I've traded these markets, so that when I am in the markets live, I know exactly where, what have I done? I know exactly where I want to be entering and selling, etc. I would like to be buying there. If I bought there, where would I want to be selling? Above some relative equal high, so probably above this high here. And I'm trying to be as realistic with it because it's not like I'd sell up here, because I'd 100% sell above here though, because I can see that high, whereas I wouldn't see this high if I was buying here, would I? But I'd know this high is here, so I'd want to be selling here. So on this candle, so I'm going to make that buy side. Let's just add it to my, can I add it to my favorites? I'm just thinking, would I know to sell above this swing high? Probably not. Well, it depends what's over here, I guess, but realistically I don't think I'd be selling here because I wouldn't expect this. However, when price returns to it, I'd know that this is a selling point, so I'd like to think I'd be selling here. More realistically, I'd be selling in this wick, so I'm going to put my sell here, and my stop loss would be put above these candles here. Where would I want to get out? Below this low, and then I'd let out half my stuff at 50% off this range, which would be on this candle here, so just below this low. I'll keep doing that. So this is me letting go of this sale. I could add to my position at this fair value gap. And then I'd let off all my stops below this low. So I'm going to put 2 here because I've got 2 entries. 1 and 2. So as we go into I just noticed this breakaway gap. I'm starting to recognize them now. Baby steps, guys, baby steps. You see, I wouldn't really trade after 12, but I'm going to put an entry here anyway. And I want to recognize this is a breakaway gap. You see, with breakaway gaps, the reason I want to understand them is because when they form live, when we're forward testing, that's something I never anticipate forming. And I'd like to think that I could start to anticipate that forming. To be honest, if I was buying there though, where would I want to get out really? I'd probably want to get out up here, knowing me. I'm not going to put that there because realistically I wouldn't be doing that. Breakaway gap here as well. Why? Because we've respected it and we've broke away higher and run into buy side liquidity resting here. of this range. So these two candles could be entries. And then we're able to get out just above the buy side. So this candle here would be where I'd be getting out. And then obviously we see this break in market structure here. So I'm like, okay, now the market wants to go down. So my next entry would be in this area here, this fair value gap. Why is this not a breakaway gap, Sean? I mean, I guess it is. I don't. See, this is the thing. Is it, or is this the breakaway gap? Probably this. This is what I mean. I don't know. But the more we do this, the more we'll figure it out. How long have we got? 21 minutes. So we've got another 9 minutes, so to speak, and then that should be the end of this episode. It's getting a bit messy now, isn't it? As per usual. Here's the thing though, if I was entering here, I would put my stop loss above this high here, not above there. So I'd probably be getting stopped out with this wick, which isn't ideal. I'd like to think I could enter here, but at the same time, what time is it? Oh, this is during London. Okay. If you had a bias, yes. Where would my stop loss be? Above here. Why? Again, this range has been traded through. Buy side, sell side, buy side, sell side. Here's the fair value gap below that. I'm going to start looking out for that more often. Because I know in his recent video, one of ICT's recent videos, he did explain about fair value gaps and the way that if price has been trading through it on the upside and downside consistently like this, it's likely that price doesn't need to return to that range anymore. Very interesting. Where would I let go of my position here? Probably below this low. Obviously we traded into some kind of low from a previous data, but I'm going to put this low because that's more than a good enough trade. Sell here, I want to get out here, but as you can see, I wouldn't want to be sitting for how many hours? 1, 2, about 3 hours before we break lower. Aggressively too, not ideal. But I'm going to still. Entering here would be gorgeous. To be honest, you could enter here. What's it called? As an entry drill, I forgot what it's called, but can we find the breakaway gap here? I guess this would be it. You can see price trades at the 50% level. So I'm going to keep my eyes on this. You can see we trade down to the 50% level, and I guess that would make this half of the fair value gap the breakaway part, right? On a lower time frame, I'm guessing, or I'm assuming, price has already traded it. But if we look closely, we can see there's a gap within a gap, and that's what we trade to. Downside, upside, support. So I guess this would be the breakaway gap because we don't touch it. Let's call that the breakaway gap. Put it inside. And I'm also going to mark out the 50% level of this because I want to show how price respects it. When price respects 50% levels and then breaks higher like this, it's confluence for higher prices. Like it's showing that it wants to trade higher, and as we can see, it does so precipitously. 1.09511. I'll make it red and dashed as per usual. How long? 25 minutes. We've got 5 minutes left. To be honest, we've got a lot done in this episode compared to the last ones. As in, the last ones took a little bit longer going through the charts, but I'm kind of just right now. So you can see it finds support. Once we trade higher, we find a break in market structure here. Swing low, swing low, swing high, creating a breaker block, which means that when price returns to it, we should be able to buy. So these are all models. And you can see that this would be the breakaway gap. Why? Price volume stays above it, we trade in it, but volume stays above it. So I want to see this as a breakaway gap. Price shouldn't come back down here again. And then I'm also going to mark out this breaker block, which I believe is this candle here. Swing low, where's the swing high? Here. And you can see how price treats it. Volume all stays inside it. And I also want to mark out the break in market structure here. So I'd like to enter. Where would I want to enter if this was me? Here at the breakaway gap. And then I'd like to enter again here at the fair value gap. Because remember, this is below this is the current trading range. This is all in discount, a significant discount. Where would I want to release my stops? Above this high, buy side liquidity. So where would I let go of my stops? Here. Or probably in this candle because I get scared. But I'm gonna be optimal and say that I got out just where I wanted to. Yes, price trades higher, digs into this fair value gap, but this would have been more than enough of a exit for me. And what time is it? Yeah, it's going into the afternoon session after 1:30. Between 12 and 1:30, I think is the 12 and 1:30 is the New York lunch. And then we break higher, manipulation. And then there must have been some kind of news release or something here. That's disgusting price action. Beautiful relative equal highs up here. I can imagine price wants to attack that. Yes, of course. Right, so we're at 28 minutes now, so I'm going to stop here. But yeah, thanks for watching, guys. I'll be making another one, of course. This is what we do. And don't forget to like, comment, subscribe, blah, blah, blah. And I'll catch you in the next one. Peace.